DeFi has crossed the chasm with this year's stablecoin as ChatGPT movement. Today, it's reshaping capital markets, liquidity systems, and even institutional finance. And we're joined by two leading investors who have been at the forefront of the journey to share how they see the next wave of DeFi innovation. So we have Ben Lakoff, co-founder of Bankless Venture, focused on investing in projects that advance decentralized finance and ownership economies. Welcome, Ben.
Hey guys, morning.
And we have Rosen, managing partner and blockchain builders fund with deep expertise in scaling and funding Web3 infrastructure and DeFi projects. Welcome, Gil.
Thank you. Good to be here.
So maybe we can spend a quick 1-2 minutes to do a quick self-intro.
Sure. Hey guys, Ben Lakoff. I'm sure a lot of you have heard of Bankless, the media outlet. I joined the guys and launched Bankless Ventures in 2023. We're on our second fund now. We do everything but gaming, early stage.
Hey, Gil here. Managing partner of Blockchain Builders. We're an early stage fund investing in a ton of blockchain infrastructure, digital finance, and AI. We got our start kind of in the Stanford ecosystem where a bunch of us kind of really helped build the ecosystem there, started an accelerator, do an event series, teach a class. We've now been expanding to other academic institutions and really feel that like the research side of things is where a ton of innovation happens. And that's also where there's a ton of DeFi degens, for better or worse. I think it's interesting to see kind of how that affects the space as it matures a bit more. But we've just finished basically deploying Fund 1 and are about to start Fund 2 as well. So exciting times.
Great to have you guys here in Singapore. I know it's a long flight for you guys. I hope you guys get over the jet lag, get used to the humidity.
I just arrived last night. That's why I was a little late this morning. Feeling great.
All right, we'll ask some engaging questions, difficult questions.
Perfect.
You said bad gaming. Firstly, this morning is all about DeFi, right? I think DeFi went through, oh my God, DeFi is it's going to change the world to, oh, DeFi bubble burst, and now DeFi has come roaring back with more assets on chain. So curious, how has the DeFi investment thesis changed, or has it changed, right, over the last cycle? I think whoever wants to take it first.
Sure. So I don't know if everybody paid attention, but Vitalik just wrote an article on DeFi, which was a massive stamp of approval. He has a pretty high bar for something that he thinks is like valid within the ETH or crypto ecosystem. And he's always kind of like, this has always been a pushback from DeFi founders in the Ethereum space. They'll go over to Solana or something where they get a lot more support from the foundation, and Vitalik and ETH Foundation historically haven't been as helpful or supportive for especially like more financialized products like DeFi. So I think for us, especially at Bankless, like this idea of DeFi being the centerpiece of a lot of Ethereum and a core reason of how people go bankless, yes, but a key use case of crypto. So for us, it's kind of always been one of the biggest use cases, and we're glad to kind of see this coming back a little bit more into center stage. So for us, it's kind of been hold the course, and I think now you have Larry Fink talking about tokenization of everything and more assets coming on chain, obviously starting a lot with stablecoins. So yeah, we're super excited to see all the forward momentum there.
That's right. It's literally in the names, right? For those that don't know, Bankless started as a podcast with the goal to unbank the banked and bring everything on chain. And Bankless Venture, I think, one of the key theses for you guys to invest into DeFi. Love to hear more from you, Gil.
Yes, I mean, I think the only two use cases that really had product market fit for the longest time in blockchain were gambling and stablecoins, right? Access to the US dollar, etc. And gambling for much of that's the first use case was fundraising for crypto, the ICOs, and then we had kind of yield farming where we were basically creating these like magic loops on magic internet money to borrow against fake money so that we could make more fake money in the hopes that someone else would take the bait and be the end result for that. And then we had kind of meme coin trading. So we've had a long stretch of, I think, like gambling within within the crypto ecosystem. And a large part it was because it was essentially illegal in the U.S. Right? But the promise has always been, can we create open permissionless infrastructure and financial infrastructure? And I think we're finally in a place where, one, it's no longer basically illegal, and two, the benefits of creating all of these like gambling ecosystems was that we created this really robust infrastructure that now is able to kind of act as this backbone to underpin real financial applications, whether it's for RWAs, whether it's for kind of cross-border payments. But I think we're really seeing this transition of, we've used gambling in many ways to build up this foundation that is strong enough. This is really like what disruption from below is in a classic sense, that it's good enough to actually be used for real financial use cases, and DeFi is becoming just fine.
No, I think that touches both the positive and the negative side of crypto and DeFi, right? Totally agree with you. Because we started investing in DeFi since the DeFi summer. Totally. I think this is the first time in human history you have a technology that reshapes money, right? And it's global and it's permissionless, and it's such a powerful tool. So I think on the positive side, you definitely see the efficiency and gain, right? Like look at Uniswap, with how many employees, less than 50, right? Processing volume, much bigger than traditional, maybe Nasdaq today. And also you look at Hyperliquid, 11 person, right? Per person employee is close to what? 1 billion. It's unthinkable. It's even more than per employee revenue for Tether, right? So that's the power of this technology. But on the flip side, like you said, it's so close to money, so people take advantage of that, right? And sometimes it's hard to ascertain whether it's true adoption or whether it's juiced up because of the fake money you're printing, right? So a lot of times you see like TVL growth in the early days, right? Go to $1 billion very quickly. But I think the real test comes after the initial rewards dies off, right? Do you really have product market fit? Are you actually generating money? So I actually really liked the current revenue fundamental meta we're coming back to, which makes, I think, investors' job easier as well. Right? Because you can go back to, hey, actually, revenue is not a meta. Revenue is how people should be looking at the projects from day one, from first principle perspective. Yeah. Maybe from here, I want to dive deeper. What excites you the most around DeFi or CDeFi, financial application? I think there's basically trading Hyperliquid, right? You have like payments this year, Plasma's massive launch a couple of days ago. People are, talking about, I don't know, 30 billion, 50 billion valuation target. And then you have ChatGPT moment for stablecoin Circle listing. So that's around payments. Also tokenization, right? All the institutions everyone's talking about bringing assets on chain. Maybe there's other verticals I haven't touched upon, but what excites you the most?
I think the intersection of crypto and the real world. Crypto's kind of been in its own kind of bubble for quite a while, where the assets have been crypto assets, and they've been representative of tokens for various types of infrastructure and applications that have kind of siloed here in this internal, very self-referential world. And I think that bringing RWAs on chain is great, right? I think the adoption of the finance industry of crypto is great, because what this actually means is that all of this infrastructure that we have is now being used for real demand, and that demand is tremendous. So like Arbitrum is underpinning what is it? Robinhood, Securitize, bunch of others. What this actually means is that this infrastructure is now no longer, there's always this question of, is the price of a token based on speculation, or is the price of a token based on actual demand and token mechanics, fees that are generated, and then potentially bought back, which in many ways I guess is kind of like the crypto version of just stocks and being able to distribute those earnings. But to me, like, what excites me the most is this intersection of crypto with the real world in every aspect, both on the trading side as serving as foundational infrastructure for kind of more traditional financial applications, and especially the payment side. So like one of our portcos level, like they're building stablecoin payments infrastructure like everyone else, but their customers are literally like Web2 fintech companies in the Philippines and India that just need better financial rails, right? So that they're not even trying to, they're not a crypto company that's trying to go after the retail industry. They're just serving as a better financial infrastructure, stablecoin and payment rail infrastructure. So to me, like that's the most exciting thing, and that's where growth is going to come from. It's real use in the real world, generating real revenues, with real metrics that looks a lot more like Web2 companies.
Do you feel like investing in crypto or DeFi in the future is going to look like investing in the next generation of fintech, basically?
I do. I think that the caveat there and the slight difference there is that in fintech, in traditional Web 2, you have these moats and you try to have monopolies, and by definition, you don't necessarily want to have open ecosystems. And that's good in many ways for a company and a company's growth. It doesn't necessarily give everyone the benefits that they want from open permissionless infrastructure. So I think there are fundamental differences here. How do you maintain a moat in that sense where your infra is open for everyone to see and use and potentially fork? But I do think that this focus on customer acquisition costs and LTV and growth and revenue, these are things that matter much more, and like we're looking and judging and assessing companies based on these real metrics.
Got it. Things that can touch everyone's life, basically. Ben?
Yeah, I'd agree with a lot of that. I'd say in general, there's a lot more capital coming on chain and a lot more assets being tokenized. So as we have more of these assets, seeing new borrowing and lending platforms that are catered specifically to these, and then kind of expanding out along the borrowing and lending with like more protocols doing under collateralized or uncollateralized loans, I think will be very interesting. And then probably more applicable for you guys, like the having more agentic use cases within DeFi and kind of helping you allocate amongst different DeFi protocols, I think also is a very interesting area for us. So those would be two big ones.
Yeah, totally agree.
You think that's real?
Totally.
AI and DeFi.
I mean, it's just a matter of timeline. Like, snap our fingers and have these autonomous, very intelligent agents allocating across all of these DeFi protocols. Probably not going to happen overnight, but we're moving in on it.
Doesn't it, I guess, arbitrage itself out, though, if everyone's using these same agents to kind of find all these, to rebalance things, that then like there's almost no alpha anymore?
If they're using the same agents.
Or does it become the opposite, where all these agents become adversarial and start spamming fake transactions, and then markets become irrational because they're trying to fool each other?
Also that.
That's why you need blockchain to make sure AI agents are honest. But I have to say, like, I hate operating wallets. So if I have an AI agent that can do the work for me, I would use it. Yeah.
Well, even if there's still like a man in the middle for a lot of it, and it's just like doing a lot of the heavy lifting for a quant, it's still like quasi quant fund. It still could streamline a lot of things.
No, I totally agree with a lot of points you mentioned. I do think AI agents are going to use crypto rail, not going to use legacy banking infrastructure to make payments, right? We can dive a lot deeper this afternoon by hearing some of the crypto AI projects where they're building, and also excited about products that can touch everyone's life, because I'm sick and tired as a crypto investor asked by my normie friends, other than Bitcoin, what can I use, right? So for years, I'm like, there's a lot of on-chain stuff, but like the barrier of entry is quite high, right? So I'm looking forward to stuff that's just like simple, easy, just like your banking app, to show them there's so much more. Yeah.
And actually, I can add another one that we are quite excited. I don't know if, do people in Southeast Asia use Coinbase or less so?
Yeah, we do.
Okay.
We have Coinbase Singapore.
Okay.
I don't know other region, but Singapore
Well,
is.
just for an example, with Coinbase is like you can take a loan against your Bitcoin on there, and for a lot of people, they have no idea what's happening. But you just do a couple clicks, and in the background, it's taking your Bitcoin, changing it to CBBTC, wrapped Bitcoin on Base, putting it into Morpho, and then taking a loan in USDC. But I mean, this was like also a bankless, like the DeFi mullet. It's like you have this centralized front end that's a publicly traded company that's super trusted, that a lot of people use. And in the background, underneath, there's a DeFi protocol and allowing all this magic to happen. So I think things like that, and Robinhood's also a good example that you'll be trading stocks on chain or pre-IPO companies on chain, but kind of underneath the hood and abstracted away from you is crypto rails that's making it more quick and lower cost and easier. Permissionlessness maybe less so in that case, but those sorts of things do excite us quite a bit as well.
Actually, a segue, right? Given we're talking about this whole DeFi mullet, different layers of the DeFi Lego, you can swapping it out. What do you guys think is the moat for DeFi projects or CDeFi projects? Because I think sometimes you look at a project, it's like, oh, it has 5 billion TVL, 10 billion TVL, it must be there to stay. And then all of a sudden, bam, you have Plasma, right? Launches within how many days? A week, it achieves 7 billion TVL, right? And it's like juiced up rewards, but of course, the long-term vision as well, right? So in a way, I think it's because this DeFi Lego are so permissionless, right? Like you really have to compete on how smooth, like the depth of liquidity. There's a lot of factors, but you can get swapped out very easily as well because there's no lock-in as traditional bank, traditional financial stack. Just kind of curious how you guys think about it.
Very difficult to have a moat. I mean, especially if somebody like Coinbase is driving so much demand into Morpho, then eventually, yeah, they just centrally or vertically integrate and build their own kind of special purpose for that if they can attract that liquidity. So I think it does get more difficult for sure with these aspects.
Yeah, it's interesting. I think we're starting to see it a little bit with kind of every front-facing application building its own chain in some ways, and then kind of swapping out infrastructure. I think there's two moats that you could potentially have. One is a fundamental technology moat, which is hard to maintain because you keep needing to innovate, right? So if you are literally orders of magnitude faster, better, et cetera. The other is a user experience moat, and often that'll be less on the infrastructure side, but more on the who owns the user at the end of the day. And I think we'll start to see a lot more vertical integration. In fact, I'm kind of surprised that in blockchain we haven't done as much vertical integration. Usually the way that you succeed in the Web2 space is you want to build infrastructure, you vertically integrate, and then you end up building the end user application. People use that application, and then kind of once you have that adoption and that distribution, then you platform yourself out and become a marketplace of sorts or a chain. And we're kind of seeing that with Uniswap. We're seeing it with Hyperledger. So I think ultimately that becomes your moat, is your network effects and your and the ecosystem that you end up building around that. But I think it starts with like vertically integrate. You get a bunch of users. You do something better than everyone else. And then you create an ecosystem of other people that are building on your infrastructure to help kind of support and reinforce that ecosystem that you've built.
I think you start to see some of those though, right? Say for example, Robinhood has distribution. So instead of like using another chain, they're like, I'm gonna build my own chain, right? Yeah. So kind of going down the stack. And same thing, you have USDC, USDT. They're like, I'm the most popular assets in every chain. So why do I, I want to keep my revenue or expand revenue stream. So why don't I launch my own chain? So you've got Plasma stable, right? And then you have ARC from USDC. So I feel like along this whole DeFi stack, whether you are application assets or chain or middleware, I think people are figuring out, like, I want to do vertical integration. I think just now even Kyle Swap was talking about integrating, not just the aggregating volume for DEX, but also kind of integrate the bridge as well, right? So just kind of making yourself such an integral part of the ecosystem that you can't be, dismissed.
Right.
Yeah.
Which isn't because then if everyone does that, we then have more fragmentation as well, and then we start to think about, does interoperability start to solve that, and to what degree, and how can you swap things out from a modular perspective? But no, I agree. I think we're going to see more and more vertical integration in that sense, and maybe we'll start seeing consolidation as well, and chains buying other chains and applications, etc.
That would be super interesting. Next question is, how do you guys choose the right team to back now? What kind of background? Because I remember back then in the early days, it's like, I want crypto native people who, understand the crypto ethos, right? Like, I don't care if they come from Stanford, MIT. But I guess now I see more founders who come from TradFi, right? Like Jeff, Hyperliquid is Hudson River. So you have more high caliber TradFi background people coming in. Wondering how have you the evaluation matrix evolved over time? Are you guys seeing differences?
I'd say the short answer is yes. I mean, these founders need to have a good answer on go-to-market. And if you're building a certain type of protocol or DeFi primitive and you're not thinking about like your institutional capital strategy, and it's more of like a DeFi native doing points program and targeting these KOLs or whatever, it's probably not going to cut it in this next era of crypto. So yeah, I'd say still over emphasis on the founder on a variety of characteristics, but especially thinking much bigger than just this kind of like corner of the internet that used to be crypto, because it now touches many different parts of society in different ways.
Yeah, I agree. I think it's this question of like, what are you building for and what market are you building for? If you're building for a crypto degen market, then yes, you want someone who's a crypto degen because they understand their market. I also think that's the smaller market that's highly competitive that everyone has been going after to date, and that's not necessarily where the large growth is going to come from. So if the large growth is going to come from adoption from normies, then if you're building a payments infrastructure, then you need to know payments. You need to be able to do like B2B sales to all of these fintech companies. If you're building infrastructure for RWAs, right, or to support public markets, then you need to understand public markets. You need to be able to sell to those people. They need to have relationships. So very much, you need people with like we're looking much more people with industry experience as well. And ideally, you have the people that truly understand the underlying like crypto principles and like. It's not easy to build in the crypto world. There are fundamentally different things and frictions there. So you need the crypto native devs, but you also need the product folks to be very native of the sector that they're selling to.
The domain expertise. Yeah, because the race, I guess, it's much more competitive now. What are some of the clear barriers you think are there prevents DeFi mass adoption today?
Define mass adoption.
I think would be like, used by your parents, maybe not grandma, your parents.
Yeah, I mean, I think usability has traditionally been one, but you have like these apps like Coinbase or Robinhood that are kind of innovating on the fringes there. I do think just there's this like capital TVL trust Lindy begets more capital trust Lindy that you see with something like Aave, and as these DATs and other large institutions raise more capital, it's like, where are they going to put this capital? In the DeFi protocols that have the most TVL and the most trust. So there's a bit of just like giving it time and getting it more capital that then makes it appear more trustworthy. So those are big ones, I think, for me.
Oh, maybe flip the question. Did you also feel like we already reached some sort of mass adoption?
Yeah, I mean, yes, some sort of mass adoption. It's still no longer like farming yams in a Discord, but it's not quite like for a lot of Americans, for example. People
Is
are
it
like,
10%
why
holding crypto now? Or?
Well, I mean, for like, the big part of the developed world, they're like, well, yeah, why? I have good access to credits. Most of my assets are in stocks, and I can borrow against those very easily with a few clicks, and, I can borrow at 5%. It's not a huge deal. So there's not like a big need for a lot of these things from the developed world. So, but in the developing world, perhaps, I mean, if you have access to U.S. stock markets through tokenized securities and you can bundle those up and borrow against them at 3%, that's a massive, massive unlock. And that stuff is coming now kind of a lot more quickly than we think. So crossing that chasm of like mass adoption, you need more people to own more assets in crypto, whether those be real world assets, tokenized dollars, stable coins, or crypto itself, and then being able to use the magic of DeFi, which is swaps, sends, borrows, lends, stuff like that.
Yeah, I see what you're talking about. The edge cases, I mean, cross-border transfer, largely people see the benefits. But for people in Singapore, they're like, why do I use stablecoin, right? Unless you have to look at, you get 10% yield, right? And then you can do a lot of other things. But that takes time for people to get that holistic experience. Yeah.
And most of that is dollarized right now. I mean, so if you don't have the majority of your assets liquid in dollars or crypto assets, DeFi doesn't offer this massive, massive use case.
Yeah, I think mass adoption is going to come surreptitiously, right? It's not. I don't think mass adoption is going to come through people wanting to use blockchain infrastructure for payments or stocks. I think it's going to use because that's a better technology. So, like on the payment side, it's all these fintechs that are adopting blockchain rails underpinning them because that's the cheapest, fastest way for them to kind of make a remittance from one country to another, because otherwise you have to have like banking licenses in every country and maintain treasury in every country, and that's just complicated. So I think like on the retail side, I think it's just going to happen because this is the better tech, and there's a whole bunch of people that are doing B2B sales to these traditional fintech companies that will leverage kind of underlying crypto infrastructure. Maybe on the other side is to your point, there is a need by people in emerging markets for access to US dollar. The people that are currently doing that's Binance, that's Tron, and they have the ability, kind of like Coinbase does, to cross and just become more mainstream overall. And instead of being simply like these crypto platforms, just to become like these everything apps. So that's kind of on the retail side, and then on the, I 100% agree that, like by and large, banking in developed world is fine. It's not amazing. There are certainly things that could be better, but I think in the world of finance, kind of instant settlement, increased reducing counterparty risk, 24/7 trading, access to being able to make complex trades across different exchanges and asset types that traditionally you can't do because there's too many middlemen. So I think we're already seeing, like within the finance world, there's an excitement about adopting blockchain technology for kind of increased liquidity and all these benefits that it adds. I think the challenges there are still, there's some regulatory stuff we're figuring out. There's interoperability, and there's just a whole bunch of infrastructure that I actually think still needs to be built, right? So if all securities trading goes on chain, that means every single hedge fund now needs to access blockchain data to understand what the hell's going on, right? Do we have the right tooling for people to be able to interact with blockchains, kind of for your average hedge fund or whomever, or financial institution? So I think there's a lot that needs to be done there. I think on the compliance side, we need to. There are a number of chains that are like they're focused on compliance, right? And I think like there's still some work to be done in ensuring like who is trading with whom and how do you kind of cordon these people off. But I think we're kind of inching towards there. In the next 2 to 4 years, I think we'll be there.
Yeah, certainly hopeful. I think. I think a lot of times, like for users, they don't know what they want until they're educated as well, right? It's like before you start to be able to trade assets 24/7, you're like, what's wrong with 5 days, right? Trading stocks, or what's wrong with T+2 settlement? I think it's hard for a lot of users to imagine unless they're offered a superior product. It's like, oh wow, this is leaps and bounds better. Yeah.
All you have to do is send an international wire transfer and have it lost.
Which we
It's
all
insane.
experienced probably.
You talk to like 20 different banks,
Yeah.
and nobody has any clue where it is.
Yeah. Great. Let's wrap up the last question. I don't know, killer app? Maybe it's already there. What do you guys think is the killer app to onboard the next 100 million DeFi? To DeFi?
Probably Coinbase or what, Robinhood, something that looks like that.
Yeah.
It's not that fun for you, sorry.
DeFi mullet.
Yeah, or maybe the even more evil thing like WorldCoin.
That's
right,
a bit left curve yet.
Well, I think the faster route is probably going to be the likes of Robinhood or Coinbase that will just get mass adoption by people that don't know that they're using crypto on the back end or don't even care, right? Robinhood's European app uses blockchain, or at least that's what they say, uses blockchain in the background. I think in the dystopian world where in 3-4 years AI takes over, you don't know who's human and who's not, then you'll need proof of humanhood and identity, and you'll need that to that potentially becomes this way of like your new ID, right? Validating that you are who you say you are, that you want to be able to sign transactions. And they've been doing it. I mean, they've onboarded like 40 million people. Not that I trust Germans with creating identities and numbers for people, but uh, sorry if that's inappropriate.
We haven't scanned your iris. I take it.
But I do think there's it will be necessary to have some sort of
Now you're raising some alarm.
yeah, but we need to have a way of protecting ourselves from an identity perspective, and I think the blockchain makes sense to do that, and biometrics makes sense to do that, and that's the so.
Awesome. That's a great way to wrap it up. Thanks, guys. Really appreciate the perspective. Is there any questions from the crowd?
Privacy? So the question's privacy. Like, why haven't we seen privacy in a big way? Yeah, I mean, I'm also super bullish and waiting on privacy. Having public, transparent, permanent blockchains for all of the financial infrastructure is great for a number of things, but it is all public and nothing is private. So I think privacy will be a big part of this more on-chain future. But you got to remember, I mean, like, I'm American. I don't live in the U.S., but like, we had very terrible regulation for anybody touching the U.S. I mean, there's developers in jail that worked on privacy protocols. So you were very much needed to be complete anon working in privacy, or like take it to the face with regulators in a very difficult way. So I think now maybe we have a little bit more room in Sandbox to play a little bit more in privacy. I do think that privacy is going to start being a little bit more important. Tempo has like private payments somehow built in some way, I think. So you're going to start to see this being more important, but what that looks like, if it's some like on-chain mixers for North Korea specifically, probably not so much, but being able to use it in a more compliant way. I mean, I know like Oxbow and there's some other like privacy pools that work, that's like, good actors can use it. They can have on-chain privacy by proving that they're not very bad actors. So bullish on privacy being a bigger part of this new on-chain world.
I'll take the contrarian view because it's fun. I think people don't care about privacy because I think, again, product market fit has been emerging market access to US dollars, that their money doesn't go to crap, and payments. And when you have no other alternatives, like privacy is a nice to have, it's not the most important thing. Having access to capital is the most important thing. I do think that with institutional adoption of blockchain, like, you have to have privacy. So as we start to see securities trading on chain, as we start to see kind of institutions, doing B2B like remittances, then I think privacy starts to matter a lot more. And I completely agree that, whether it's with like permission privacy pools or like Alio, or like there are a number of different ways that you can tackle the issue, but I think privacy will become important from an institutional perspective.
I think crypto is kind of invented as an answer to preserve privacy, right? Like, you have this option outside of your normal financial infrastructure. You can choose to be anonymous, and you can use to own your assets, right? Like, so I think it's already an answer to that. But agree with you. I think how comfortable people with privacy, it's always kind of swings. I think most of the time, if you get, I don't know, freebies, people don't care about it until something happens, and they're like, oh, I want my data and whatnot. So it's always a balance to be striked. Yeah. But having said that, do we have some other question?
One of the paradoxes is that we have more and more concentration risk back into the United States, which is, so these stable coins are backed by US treasuries or short-term treasury bills funding your, as a collective word, $32 trillion debt. So my question is, do you see, I see that you've been based in Portugal, do you see any other currencies which could be an effective stable coin, or is it just going to be, with the current administration, purely US dollar hegemony, so there'll be no other currencies which could, sort of be an alternative to the almighty US dollar?
Yeah, I mean, this is the issue. The stablecoins as like the structural buying demand for the U.S. debt makes a lot of sense. We can export our dollar all over the world, but most of stablecoins, what percentage of stablecoins is U.S. dollar based?
I think 95%.
Yeah, 95. I mean, it's crazy. So if you want like a good yielding euro coin or any other stable coin right now, there's not really a good option. Yeah, 70% of the world's capital markets are in the U.S., most of which in a few big companies. That's kind of the reality. Maybe Bitcoin, maybe some more crypto native currency is the new global reserve currency. But until then, as we see more assets come on chain, there will be more options. Tokenized gold or something, maybe. But yeah, right now it's mostly dollars.
It's the least worst option. You want to put your money.
Says the American.
You want to put your money somewhere that it is safe. So the strongest economy in the world ends up becoming that place, so to speak. I do think China is probably looking at this and reconsidering their position vis-a-vis crypto in general, and potentially having a like digital yuan, and I'm sure they'll want to make a dent at some point, but it's going to take some time to get there.
Yeah, I think it's a super interesting topic and very strategically important. I was just at a workshop with a bank that has a Chinese background, and I think this is one of the topic everybody was curious, right? If China issues RMB stablecoin, what would people do with that stablecoin? They would just turn, switch that into US dollar denominated stablecoin and generate yields and do stuff, because that's majority of the liquidity going to, right? And that's going to be channeled to buy US debt. So I think every country is going to have to think about what's their stablecoin strategy, because this is the war for the next generation finance, and I think U.S. has done it really smartly, which is why the U.S. Trump administration find this new tool, right? Basically channel and aggregate global liquidity and kind of create structural buying for debt. They found this new powerful weapon, and that's why Genius Act gets passed so quickly. All incentivized to do so. So that's my take. So.
Totally. It's yield curve control in a different way, right? But I also think you got to remember, like, the U.S. dollar's down 19% this year versus other currencies. So now perhaps it starts to become a little bit more relevant of a discussion of finding another currency that, I mean, if it's not generating 20+% on chain, you're kind of like losing value against other main currencies. So just having a stablecoin on chain that doesn't devalue by 19% is a pretty big win, probably.
Having said that, thank you so much, Ben and Gil. Great to have you guys here. Hopefully you enjoy the rest of your time in Singapore.
Thanks, Emma. This is awesome.
Thank you.
Appreciate it.